view on fundamental things. He comes up from a different way of looking at stuff. Alexis, please jump on camera, jump on the microphone. We've got 5 minutes now for Alexis. Here you go.
All right. Hi, guys. Yes. All right. So I think I'm really happy to go after Julian because I think we have a very similar stuff happening. And again, I think my fundamental focus is on interest rates. I'm just going to do a quick share of the screen to kind of explain where that comes from. My attention now is I am looking forward to the unemployment rates that will be coming out this coming Friday, the non-farm payrolls, because there is a lot of speculation about when interest rates will actually go up, and I think we are. I think it will ride on this non-farm payroll that's going to come out. So if this is actually from Trading Economics, and I have been trying to figure out how to get this charts to overlay, but I couldn't. So we'll just have to look at it like that. So on the left side here is the unemployment rate, and on the right side is the Fed funds rate. So what I was trying to determine is what is the comfortable rate of unemployment that the Fed will be comfortable with, to say that, okay, unemployment's pretty okay at an okay number now, let's increase interest rates. So I think I'm only focusing on the latest pops. So we have here somewhere after about 1989, 1990, you can see there was a slight pop over here where the unemployment rate was about 5-ish%. All right, so I would say that between 5 to 6%, I think this little wiggle over here would be some sort of a benchmark the Fed will look at to say that okay, they're comfortable with these numbers. And if you notice, somewhere in I think 2005, 2006, which is again somewhere around here, where unemployment rate came down all the way to this area, there was again that slight pop in interest rates, and most recent, of course, is 2016. So unemployment prior to that was way over here, and the moment it came down to about 5-ish%, I guess that was when the interest rate started going up a little bit until, of course, COVID hit, and then that's where we are at now. So where is unemployment figures right now? They are at, let me just clear the drawings and go back to this. Okay, so unemployment figures, this is the last 5 years. I'm just going to 1 year. So this is where the unemployment figures are right now. It is somewhere about 6-ish, slightly above 6. 6.2, 6.3. So it has been steadily going down. So I think that's why the anticipation of interest rate pop is there. But how far below 6% are we looking at? If the Fed is comfortable anything below 6%, then I would say that based on this coming Friday's non-farm unemployment figures, we should see a pretty interesting decision being made. But if unemployment still floats around above 6%, then I would say maybe the next report would give us a better indication. We'll probably sit on those low interest rates for now until we see a little bit more improvement in the unemployment rate. So I'm still hunting down for more details on this, but I think the attention now is really on when is the best time to increase interest rates. And of course, I have been bullish on the on the dollar as well. What I am looking next is actually this dollar. I'm actually looking at the dollar moves. I'm still bullish until interest rates tells me otherwise, but it's a little bit overextended right now. And my chart for next week is actually the pound Swiss. I know it's a little bit far off from the dollar, but this is the I think this is the nearest chart that I'm looking at, and it's a little bit more in line with what I was looking at last week, which was weakness in the Swiss. A couple of people actually asked me why I prefer the yen to the Swiss, and the reason probably is here, flashing you an article or something like this. So this is the global currency composition by FX reserves. The data is from the IMF, and this was data all the way to 2020. So if you're picking a risk-off currency between yen and the Swiss, this is the reason why I prefer the yen. This purple bar here, you can see the yen at least has a bigger volume as compared to the Swiss, which is, I think it disappeared somewhere on top. You can barely see the tiny little red line there. So this is my reason why I prefer the yen to the Swiss as a risk-off currency. And with that in mind, and with the Swiss statistics, doesn't seem as doesn't seem as fantastic, and there has been talk on the pound Swiss on what they are going, sorry, the Swiss on what they are going to do with its interest rates. I am in anticipation of that as well. So my target next week is actually the pound Swiss. Right? Two reasons. We have I spoke about the pound when it was the pound Swiss when it was testing these nice low levels here. It looks to be another consolidation here, so a little bit of technical coming in, and I am looking to trade this move. It's either to the top or the bottom, depending on where it goes. I am of course looking for a breakout of this, which will make it more exciting because the breakout would mean it will go a longer distance. But I also am wary that this is a very nice horizontal level. But I am waiting for the move that comes after this consolidation. That's all I have for now. Thank you. Back to you, Paul.
Cheers, Alexis. Thanks for that. Most interesting. Thanks for that, Alexis. Interesting stuff there. And we will wait and see how the Swiss franc and the dollar yen do run out as reserve currencies or work in the next